Good afternoon. I want to thank you for joining us here today at CVC Coaching. We have a great guest with us today, and she is a guest presenter. She's a member of the CVC, what I call my team of experts. This is my A team. She's one of the people that we put together programs. She works with some of my clients. Just a truly, truly phenomenal person. I got to know her from a mutual acquaintance by the name of Suzanne Dabrowski several years ago, who was a trusted person to me that worked with me at the CSI, Chimney Safety Institute of America. And I called up Suzanne one day. You may know of her. Her husband is a chimney sweep in the Middle Pennsylvania area. And I asked some questions about what CFOs do and whatever, but we drew it from there that definitely Suzanne advised that all companies should have a CFO, Chief Financial Officer. Suzanne also went into some detail that the majority of accountants are not CFOs. CFO is a specific skill set. CFO is a person that not only looks at past figures like an accountant does, but they can see what's called the budget. And the budget is what you've got to put together in the company. So I've asked Patty to join me today for a presentation. We hope it's of value to you. So at this point, I'm going to introduce to you Patty Lawrence. She is an independent chief financial officer. In other words, what she does is she's worked with multi-million-dollar companies, and now she's guided her expertise to working with small companies. So, Patty, I want to welcome you to join us this morning, and I'm going to switch the screen over to you now, but the program is now yours, and I certainly appreciate you being with us today.
Thank you, Jerry. I'm very proud, and IMG is proud to partner with CVC Coaching and Jerry for this webinar. So let's go ahead and get started. First of all, we'd like to talk about budgeting your business, and really this is called budgeting your business to achieve your dreams. So we want to help you as a network partner of CVC Coaching. We want to help you budget to achieve your business dreams. And to start that, we have a few questions that we want to answer. Really, I call it the 5 W's, kind of the who, what, where, when, and why. My version of it is really 3 W's and kind of 2 others. So let's get into it. First of all, what is it? What is a budget? We'll answer that question. Secondly, why the heck do we want to do it? Why do we want to spend time doing this whole budgeting activity? It takes away from our focus on the business. It takes us, time and effort. Why the heck do we want to do something like that? The next one is one of the other non-W ones is how is it done? How do we do this and do it well? The next one is who, me? You're looking at me? I'm a business owner. I run the business. I'm out there selling. I'm out there quoting. I'm out there, developing my business. I'm out there working on my business, working in my business. You want me to do this? Really? We'll answer that. And then now that I have a budget, now what? What do I do with this thing? Well, throughout the course of this webinar, this webinar is really designed to answer all of these questions. So let's get into it. First of all, though, I want to answer a question. Jerry kind of mentioned that in the intro. Is really, what is a CFO? Okay, CFO, yeah, it stands for Chief Financial Officer. But we need to understand what is a Chief Financial Officer and what can it do for your organization. Really, this person has company management experience. And that company management experience can be very, very beneficial to someone in your position, somebody, running a business. This is a financial person who's got management experience. And it's in the category of the, quote, been there, done that. And, what happens is, bottom line, your results can come faster as a result of that kind of inside management experience. And next, they really work with you on your business. They work with you to plan your business. They work with you on how to run your business. With that management experience, you can really put that to work for your company. It's not somebody from the outside looking in. It's somebody who's really lived inside a business. and is not really focused on the compliance aspects of your business, although we do make sure that you're obeying laws and things like that. But it's really somebody with that management background experience that's working with you and partnering with you. Really, and you look at it, and even Jerry said it, it's part of your A team. Your A team for your business is the people that and the functions that you surround yourself with that you may not have in-house as in your employee, as an employee, but you've got them on hand, on call to help you run that business. And a CFO, from the financial aspect, is part of that A team. So you might have, finance, you have operations, business coaching, you've got marketing, you've got your IT folks. It's really includes your board, includes your top management of your company, outside advisors, and the partners who are really behind you, backing you, and pulling for you. They've got your back. They want to see you be successful at what you're doing, and they've got your back to help you achieve that. And I would put them in the trusted advisor category. They are all people who come with a lot of experience and can function as your trusted advisor to get your business to the next level. They also function as an accountability partner. I put myself into that bucket because I think the role of the CFO is to help you be accountable for what your plan says you want to achieve and what you're going to do on a weekly, monthly, annual basis. It's really asking that person really asks the tough questions about your business and to you that others can't do or won't do. And next, a CFO really takes the risk out of your financial results. And really, that person is functioning and has a trained eye and looks over your shoulder and provides valuable input and guidance all along the way. And it helps you to make, as a business owner, it helps you to make better decisions and ultimately get better results. So now we'll get into all the W's. First of all, what is it? What is budgeting? And I would say budgeting is a roadmap or a GPS, and really it's how to get from point A, maybe where you are currently today, to point B. And point B is usually, we go back to the name of the seminar, budgeting for your dreams, to achieve your dreams. Point B is usually what that end point is. So we break it down, of course, into what's your annual plan, your strategic plan, of course, is a longer term, but then you look at, okay, point A to point B for this year is going to look like what? And what do we need to achieve from it? The next thing is a budget really quantifies your goals. So we take that roadmap and go from point A to point B, but what are our goals? What are our goals within that roadmap? So we're looking at the GPS and we're looking at the point B out there. What is it going to take to get there? And what do we have to do to achieve that? So it's really quantifying those goals and dreams in terms of revenues and also expenses. Another thing that budgeting does is it really provides controls. And the way it does that is by looking at or generating some of the reports that your system can generate, if you will. Your system is able to generate budget reports, budget versus actual. So we look at and review variances to budget. Variances are the differences between how you actually performed and how you anticipated performing or how you wanted to perform. So we do that every month, and we ask the question, why? why did that difference pop up? Why didn't we come closer to what our expectation was? Was it generating waste? Were we inefficient? Did we just have a bang-up month where it was really, really good? We had no weather issues. We had, no extraneous circumstances that were preventing, us from doing what it is we do best. The next thing, it really, like I said, it promotes measurement. Okay, we can generate reports. We can look at what our performance looked like in a lot of different categories, not only from a revenue standpoint, depending on how we set up the measures, but we can also look at the expense buckets. So we can look at, how did we do this month versus last month, this month versus budget, this month versus a year ago, because in a lot of seasonal businesses, that's what we want to look at. We want to look for this month versus this month a year ago to see if we're performing better or worse than that same period of time in the prior year. And the other thing we can do with this is look at which areas of the business are most profitable. So if you have a product business or a service business, or you have a retail versus a service business, we can separate those two and look at what is most profitable, what's returning the best, what's providing the best return on investment, where you're deploying cash, and are your resources being used wisely. The next thing is a budget really reduces risk, and by that I mean you're taking fewer ready, fire, aim decisions. And when I say ready, fire, aim, it's in the inverse order. It's usually ready, aim, fire. But when you say ready, aim, fire, that is really planning. Okay, ready, then you're aiming, then you're firing. So there's a sequence of events in there that is definitely planned. But when you do ready, fire, aim, you're just willy-nilly out there. You're just making decisions off the cuff. You're just doing whatever feels right at the moment, very emotional, and that promotes risk. So what we're doing is trying to take the risk out of that and putting into practice budgeting, which tends to quantify your goals and provide a little bit more control over what your plans are, and therefore reduces your risk. It's not saying to not take those risks. What we're trying to do is reduce the risk from those decisions. The last thing that budgeting can do for you is really it enables you to make decisions faster. So really your goals are already quantified if you have a budget, and what you're able to do instead of that ready, fire, aim decision-making approach, you can really review a new opportunity and decide how that new business opportunity might fit within your plan or budget. So do you have enough cash? Do you have enough resource? Are you able to hire more resources to take advantage of that opportunity? Do you have enough cash set aside to take advantage of a new opportunity, or say you're looking for new space or to buy a building, any of those types of things? You want to make sure that your cash will support that going forward. Next. Why do we want to budget? What the heck? What's the big deal here with budgeting, and why? Well, really, it's to plan for the future. And really, what you want to do is understand how much you can afford to spend on things like marketing, your office staffing, your new equipment, or a new building. We talked about that in the last slide. Those are things that you want to be planning for as you look at, your GPS and roadmap from going from point A, where you are today, to point B, which is in the future. The next thing is really looking at cash flow management. The P&L is always nice, but we all know cash is king. If you've got zero money in the checking account, you're really going to be constrained on what your business is going to be able to do. So, we want to understand what the cash flow looks like. The other thing is, you think that only smaller companies have, small companies have these kind of cash flow management issues, but really fast growth companies also have cash crunches. And it's great to be in a fast growth business and you can be thinking, everything's hunky-bunky and we're going to be moving forward and we're just going to conquer the world here. But as you grow, you have more demands on your cash, meaning you need to tie up more for inventory. You have to buy another truck. You have to go out and, lease or buy some new piece of equipment. You have to hire more people. Well, that all costs money and it ties up your cash. So you want to make sure you understand what your cash is looking like and your cash flow planning and forecasting so that you're able to take advantage of these things and grow your business in a non-willy-nilly kind of fashion. So in a kind of a planned rollout. The next thing is, we've all had to deal with these people, but really to secure financing and for our banker friends. So if you all have dealt with banker friends, you'll know banks love numbers. And because banks love numbers, I wanted to just throw out there, what I know about banking, and because I talk to a lot of banking people, and what they tell me is, we got to look at these 5 C's of credit. And for bankers, that's kind of their, that's the rules they live by. So the 5 C's of credit, 4 out of 5 of them have to have everything to do with your numbers. Okay, first of all, there's capacity, and really capacity is the ability to repay, and that has to do with your financing and how you get your cash and how what your cash flow looks like. The second is capital, and it's really how much capital is invested in the business. So in other words, that's another financial measure. The next one is collateral. Collateral, of course, is how much you've got into the business, how much you need for the business, how much you're putting up for the business. Is it personal? Is it the business assets? Again, it's a financial number. The next one is conditions. Really, we're looking at what are the proceeds going to be used for. Again, it's a planning type of thing. You need to lay out what those proceeds need to be used for, because the banks don't like to just give you money that they don't know what you're going to use it for and how they're going to get repaid. And the last thing, the last C is really character. And for me, character from the financial standpoint may not necessarily lie in the fact that there are numbers. It's really the credibility of the numbers. So, you have a better character, if you will, if you're able to put forth numbers that are credible. And by that, people want reliable numbers that they understand and that can be defended. Because numbers that are that you can't defend and can't explain are, make for not a very good relationship with your banker. So that's the financing end of it. The next one is really being able to respond to unexpected changes. And really what that entails is knowing what is in your plan, what is in your budget, and being able to tweak as needed. So if because we all know stuff happens throughout the course of a 12-month period, your annual budgeting cycle, you would go through, and if business picked up, you would be able to see and look at and change some numbers so that you know what your end of the year number is. You know what you know where you're going to end up. The other thing you can do is take that to your outside accountant, your tax preparer, and work with them on tax planning, because you're able to have these numbers and understand what your total financial picture is for your business, including the tax impacts. The next thing is really to evaluate, of course, evaluate the performance of your business. Really, and it's really not only your business, it's yourself. How are you performing as an owner / manager, CEO, COO of your business? How's your staff performing? what kind you have, if you set it up right, you have the ability to hold them accountable for performance, for the numbers that they're delivering on a daily basis. And you have the opportunity to put into play that accountability throughout your organization, not only for yourself, but your staff, and everybody has a hand in it. And really, the last one is tracking and monitoring waste. So along with evaluating, overall performance, you can look at and track waste, meaning your expenditures are too high, your labor costs are too high, and really understanding what things are driving that inefficiency and fix it. Next, we just want to explore, gee, how is it done? How do I put a budget together? Really, we start looking at past performance as an indicator, and I know, if you listen to TV commercials and things like that, especially with these investment firms, they say past performance is no guarantee of future performance. And while that is a true statement, the past performance, historical performance, gives us some insight into what has happened in the past and what potentially could happen in the future. So we take that as just one piece of putting together a budget. The next thing is really, if you have previous budgets, we take a look at those. We throw that into a mix, see what went right and what didn't go so right. And that's another just data point that we put into the mix to see, what information that gives us. The next thing is we do a little bit of research. And by research, I would pull in industry averages and benchmarks, some economic forecasts, things in general that would affect the budget and the cyclical nature of whatever business that you're in, and looking at those and seeing what impact that may have on the budget. What's the environmental factors that are out there that are kind of beyond our control, but we should have some awareness of, okay? Then we want to always look to kind of keep it simple. Really, we're looking at the important things to measure and what can we control. And those are the things that we're going to have the biggest focus on, because that is what we can have a hand in, and we can lever up and lever down. Okay, we have the ability to control those types of things, so we want to keep it simple. But we also want to make it measurable. So before I said, that's what we want to do, is we want to have those things available to us to evaluate our performance and measure it, and measuring is really, really important for driving accountability into the organization. And that's another thing that we want to make sure that we do. The last thing I've got on here is really make your budget impactful. Make your decisions based on data. Don't, go and put things into the budget that are kind of pie in the sky type things that there's no way that they are achievable. We want to make sure that it is measurable and they're achievable. We're talking about not only from a P&L standpoint, but we're talking about capital expenditures, meaning big purchases of either equipment or buildings, additional vehicles, things like that that are going to help you build your business. Also, we want to make sure that we are putting reserves out there to and I say reserves, we're putting kind of an escrow and a savings account out there for future expansion or a future acquisition. It's those kind of things that we want to make sure that we've got covered somewhere in the plan. All right, our next slide is really all about who's going to do this? Me? And you kind of look in the mirror and go, really? Are you serious that it's me? But as a CEO, you really provide the direction for your business. You provide that vision of what you want to do with this business eventually, not only eventually in the future, but also in the here and now, currently. So you know what your targets are. And when I say targets, you're looking at, okay, I ask my clients, okay, what are your targets for next year in terms of sales? Okay, and typically they have a pretty good idea of what that number might look like. And then, you know, what I do is I challenge them. I say, okay, well, if your number is X and you're sitting at Y today, do you think that percentage increase and that dollar value increase is truly achievable? And if so, how are you going to get there? What are you doing differently next year that you aren't doing this year that's going to help you achieve that target? And that's what a budget is all about. It's really looking at how are you going to achieve that and what plans or what is your path to achievement, okay? Your path to success, path to achieving that target. Okay, and it's not only for sales, it's also for your marketing spend. It's also for your bottom line, your income. It's also for your percentage of growth over year over year. It's for some of your staffing. What do those look like? Next, you are the one who knows what your strategy is. And when I say strategy, I'm looking for 3 to 5 years. What are you thinking is going to happen with your business? And budgeting is really breaking down or breaking off a chunk of that strategy into kind of a one-year plan. Okay, and it's 1 year of a longer-term plan to actually get you to that point B, if you will, point A to point B. It's really only one piece of the picture, okay? But it has to be, you have to be heading down the right path. Otherwise, it's going to take you longer to achieve that strategy and achieve your dreams. Next, you're the one who knows what you want to do with the business. Along with that strategy, in there is what your growth ideas are, or, and I say divestitures. Divestitures means you're going to sell off a piece of the business. You know, is there a piece of the business that is just not fitting well any longer, and you want to make sure it goes the way, you know, you want to grow it the way that it's most profitable to you. The next one is what is your exit strategy? That's really part of the longer term plans for your business, and sometimes that's personal. What is the best way to, what are your longer term plans? Do you want to go be a beach house? Do you want to still be a part of the business, but more of an owner position rather than the COO? What does that look like? We have to make sure that we have the answers to those questions. The next one is, what are the controllable variables? And when I say controllable variables, you know what leverage you have in the business where you have the ability to turn things on and turn things off, and expenditure-wise. Usually, it's trying to really turn. In the end, I say it's trying to turn fixed expenses into variable expenses so that you can control them and they aren't controlling you and your destiny. So really, when you look at things like working on commission, because the compensation, the whole area of compensation, how can you make that less fixed and more variable? That's something that, you know, that is a big part of budgeting and increasing profitability. The next thing that I have in there is renegotiation. And I put it in there because sometimes it's needed to get from where you are today to where you want to be. But it can only be done at the owner's level. Okay, the owner's the only way. You can't really delegate renegotiation of your, lease, a very long-term lease agreement or anything like that. It's really has to be at the owner's level, and that's on an as-needed basis. The last thing is really pulling all of this together, and sometimes you need to call on your A-team to help you get over help you get this budget thing over the finish line, because it really takes everybody and a true team effort to pull it all together, to get everything down on paper, documented, quantified, and pushed over the edge. So now what? We've got all of this done. We understand, all of these, why we should be doing it, who participates, and what are the benefits. Well, gosh, now what? What do we do next? Well, really, once you have a budget, you get to measure and manage. So when I talked about before running reports and those types of things, that's key to this measure and manage stage. So really, and this is also where your accountability comes into play. So who's responsible, what are the consequences, and what are the rewards for measuring and for managing the against the budget and against your expectations. Also, we have the opportunity to reassess and learn from what has happened. So when we look at our reports and we look at those variances, and the variances are the differences, excuse me, the difference to budget. Where did we outperform our expectations? Where did we underperform our expectations? And why? That's the part of the learning process. We need to learn from that process and move ahead. The next is we have the opportunity to question our expenses. We're looking at how much do we spend and why do we spend it. And really, when we look at how much do we spend, we can also question what, why are we spending that kind of, not only the amount of money, but is that the right place to be spending the money? Either with that vendor, that particular vendor, or that particular type of spending, whether it be a marketing type of spend or it be some other kind of expenditure. Are we really getting our return on investment, and can you measure that return on investment? That's the big one, is if we really aren't measuring, then we can't really manage. So we can't really get the return on investment if we aren't measuring. All right? The next one is the whole budgeting allows for better and faster decisions. And we have the numbers at hand that will allow us to make those decisions and not get stuck in analysis paralysis, okay? Which just means you're just deer in the headlights. You can't move. You can't make a decision because you don't have any information. And that is not conducive to running a business. You need to have that information to allow yourself to make those decisions and move your business forward in a timely fashion. Also, the budget really allows us to respond to all of those unexpected changes. The tweaks that we can have, the decision analysis and support that is available as a result of having a budget, being able to make better decisions and respond to those changes that happen throughout the 12 months of the year is key to being able to be successful at running that business. Also, it allows us the opportunity to provide updates and do forecasts of our business. So you may operate with a budget for 3 to 4 or 5 months, and then things happen where you could be way ahead of budget in terms of your top line. I have a client that's there right now, and we're looking at that saying, well, you know, if you're 20 to 30% ahead on your top line, is that going to continue for the balance of your year? And if so, what is your year going to really look like now, because you're so far ahead? Or is something going to fall off the rails and kind of, you know, mess that up so that such that you're going to be right back where you were? So we update that, we continually look at that, and we talk about what does that look like and what can we do better going forward, and what's our cash position as well. So really, as you can see, there's so many questions that can be answered by the budget process. And the budget is really a vital tool for your company's success and to you achieving your dreams. I have answers to whatever questions you might have.
Well, Patty, that was some excellent information. I think everybody's got some value, but I know one of the things I've done in preparation for the webinar, and as you know, this is the second time we've done this. This is in a recorded version, so it's just me and you here today. But some of the questions that have commonly arisen, in fact, it came up on the last webinar. And the question was, you know, I understand what you're saying, but you know, one of the problems is I really don't have a lot of money, and to be honest with you, I'm a little bit behind in my bills. So, you know, it seems kind of crazy to me to do a budget when I can't pay the bills I got now. So how can somebody like you help me get out of this hole and get me where I'm going?
That's a great question. And while it seems kind of counterintuitive to have a budget when you don't have any money, the best thing about a budget is it provides direction. It's that roadmap. I get back to being a roadmap. And the fact that a budget can also be a cash budget. You can start out putting together a cash budget to see what your cash availability looks like over a particular period of time. And what that will allow you to do is put together a plan to kind of, I say, dig out of the hole that you currently find yourself in, and find that, you know, light at the end of the tunnel, such that when you get there, you are ready to rock and roll, and you're ready to have all of that nasty, you know, old bills and so forth behind you. And what it does is it helps you to prioritize, and it helps you to plan your way out of the situation that you currently find yourself in.
Correct. And Patty, I think we know some people that actually have done this and come tremendously out of debt, and have actually come to the plus side that now we've actually got to work with them and teach them that paying bills instantly may not be in their best path, but you're actually working with people in timely invoice payment. Would that be correct?
That is absolutely correct. We've had people that, you know, like you said, that have gone from, you know, being in that hole to having, I'll call it, surplus cash available on hand. And what I work with them on is to really leverage, you know, look at leveraging that relationship on a go-forward basis. Go back and talk to those vendors that have had you on COD. Especially if you've got a couple 6 months of very, very strong and very timely payments with them, go back and leverage that for a discount. So if it's early pay discount or whatever, make sure you're putting your money to work for you now, because you're in the position of leverage.
Yeah, I mean,
excellent question.
Yeah, that's one of the things I think we found, that where actually I think learning to do that in some cases can bring a savings that more than pays for the fee that you're even charging them to be their CFO if they learn to leverage those payments. Is that correct?
That is very correct.
Okay. Then another one is, we have a lot of small businesses we work with. You know some of the models I work with. You and I talk a lot. One of the things is a lot of small companies. It'll be what we would call traditional mom and pop businesses. maybe have one employee or no employees, or it may even be a personal loan. And some of these people often ask the question, why do I need a budget? Why do I need? And one of the things, and that, I think that's one of the things I'd like you to address is, why does a mom and pop business need a budget? Why is it important for them?
There's a couple ways it's important. Mom and pop type, mom and pop type businesses or size businesses, if you will. And a lot of those folks are being asked to personally guarantee the debts of the business. So if you needed to go out and borrow against your line of credit, or go ahead and borrow for a vehicle loan for the business or anything like that, they're going to want personal guarantees. And personal guarantee is they want your house as collateral. So one of the things that really is, and it gets back to, I was talking about the 5 C's that the bankers look at. One of those, and actually 4 out of the 5 of them have to do with numbers. And the last one is the credibility factor. So, looking at that and really knowing your numbers and not flying by the seat of your pants is paramount for these banker folks. So if you've got your collective together, you are demonstrating that you know your numbers, you know your business, and you've got your A-team in place, they are going to be very, very impressed with you as a borrower. And I'll tell you, your scores, just on paper, if you will score very, very highly with those folks in the ability to, your lendability factor. So they would be more than willing to lend to you based on some of those things.
Well,
did I answer that question enough?
Yeah, in fact, that sounds really amazing, because one of the small things a small business is, small business owners have to usually guarantee everything. And it's just like you said, that usually means your house and everything you've ever worked for. So what I'm understanding you're saying is, if someone gets their numbers really to that level, then they can start where the company as its own entity can now borrow the money. So you're not held personally accountable like you would be as you're signing your house on the line. You can't sell your house because of a company loan. Would that be true?
That is correct. A lot of times bankers, when they don't feel like you are quote unquote bankable as a company, they will want to latch on to your personal assets. So the better they feel, and I call it the warm fuzzy, when they have a warm fuzzy and comfortable feel and are confident in the numbers that you're presenting for your business, they'll be less and less likely to go after, kind of attach themselves to the personal side of your business. Okay, they don't feel the need to reach back into your personal assets for security.
Right. One of my business beliefs is that we want the business to be very bankable, but at the same time, we want the business to be actually self-funded, because this is the best way for the owner to obtain maximum return on the business, to where he is bankable. The bankers are beating down his door to do business, and basically the business owner is self-funded. He doesn't need it, and instead of the bank making interest, it can be conceived to where the business owner makes the interest, which has a much lower taxable rate than income. Would that be correct?
In certain circumstances, it is definitely more advantageous to go about it that way. So yes, it is correct. It depends on your circumstances, but if that's something you can achieve and accomplish, then I say go for it.
Right. Well, I know one of my clients, one of my most successful, he's not the largest one, but I know he is completely self-funded. And he has no banks. He does maintain credit lines just in case. In fact, once or twice a year, he draws out the credit line for 2 or 3 days to keep the credit line active. So he has it. He doesn't lose it, because an unused credit line, as you know, will go away and you don't have access to it. But he has turned it into self-funded, which gives him it is almost a ridiculous amount of ROI on this business by self-funding, which makes him basically independently wealthy, which is one of the reasons we want to get the numbers right.
Yes, absolutely. And you have an amazing amount of flexibility at your fingertips when you quote unquote self-funded. But you also have that ability to go back into the bank and utilize them for when you need it, not when it's an it's an emergency and you're, the gun's to your head. You don't want to do it under duress. You want to do it when it's convenient for you.
Right.
So,
Now,
it's just a timing thing.
okay, now, if somebody wants to sell a business, do you agree with the statement I'm getting ready to make, that it's all about the numbers?
Absolutely. Absolutely. It'll be all about the numbers to the potential buyer, and they will take you through due diligence, and they will turn your numbers inside out. So it is definitely all about the numbers, and the better your records are, the better off you are, and the quicker that sale, the higher the probability of a successful transaction to occur.
Yeah.
As long as you can agree on the sell price, I'll
Right.
say.
Sometimes I will get a call from someone and that's one of their questions. I want to take my business and put it on the market. And one of the things I commonly tell them is, be aware. It will probably take you 3 years to stage the business for sale unless your numbers are good now. Because again, it's all about the numbers. So if you're going to sell your business, you really need to be looking 5 years out, because you've got to have a minimum of 3 years of good, solid numbers showing value. Would that be a correct statement?
Absolutely. The buyer will want to see trends, and they will want to see positive trends, and 3 years is typically the minimum that they go back in terms of the historicals. So yes, indeed, they will want to see 3 years of historical, and they'll want to make sure that they're clean. They don't want to be looking at junk that they have, they totally can't understand, because one, that'll slow down the process, and two, now we got a credibility factor. We got a credibility issue at hand, and you don't want to go there, because that can really make the deal go south.
Right. And another thing, in the clients that I've discussed with you, I have a couple of different business models I work with. Some are strictly service-oriented businesses, where it is strictly a service company doing some sales. I have others that are retail operations that do not have service installation arms. And then I have the business model that I feel is a great one, but it is a combination of retail and service. And what I advise these is that we're running actually 2 different businesses. We're running a service business, we're running a retail business. Each of these have to be independently successful. Each have to be profitable. Each have to push business to the other, and they also cannot drain one to support the other. Now, when
Yes.
you're dealing with that type of business model, how do you put together that budget?
Well, what I would make sure is, first off, that they have 2 separate, they're measuring those companies. It could be one company, but say within QuickBooks, if they're using QuickBooks, they have the ability to go in and separate the 2 segments of the business and measure them totally separately. So they can assign the revenues and the direct expenses right to those different individual businesses. And then you have shared expenses that can be split based on amount of effort and so forth and so on. Whatever the cost driver is, that makes the most sense, that you can do the allocation based on. And you can get a P&L for each of those individual business segments that are part of your company. And that way, like you said, you'll know which one's making money, which one's not, which one's a cash drain, which one's not, without having to go back and have separate checking accounts for both of them and anything like that. You don't have to go to that extreme, but it does help in the scenario you described, where if you're getting ready to sell the business and you've got 2 pieces of the business, you might want to sell one or the other, maybe not both, or maybe both, but you've got 2 separate buyers. You need to have your your financials segmented into each of those business segments, because that's what their focus is going to be on. And if you don't do it, I guarantee you the buyer or the buyer's due diligence team will be doing it for you, and it may not be truly reflective of the value that resides in your business.
Okay. And Patty, you know, one of the things that I'm sure people will wonder when they get into this is, how do they get started? Or how do they contract with someone like you? And what I commonly tell people is, you really don't know what all is going to be involved until you talk to people. You've got to find out. And I know what we have a situation with you and other CFOs that we use here is, you know, where you've got to have an initial phone call, some way to get to know each other. And, you know, like you've shared, there's never a cost for you to have a get acquainted phone call like that. But tell them a little bit about what do you ask them in a phone call like that?
Sure, that's a great question. Some of the things I have, some of the things I have that I go through, I have pretty much a 12-point, I call it a checklist. It's not really a checklist because everybody's business is somewhat different, but I have 12 kind of questions that are kind of get to know your business questions, and I go through that with each of my clients because I want to know what kind of, how big is your business in terms of sales, how much did you do this, how much do you think you're doing this year, how much did you do last year, and what's your kind of target for next year. So, we talk about those targets and what the CEO knows. Those are the kind of things I'm looking at. How many employees do you have? How many you have in the office? How many you have out in the field? Those types of questions. What's your exit strategy? Do you have an exit strategy? Do you do a budget? What are your pain points? What keeps you up at night? Some of them are, I call them softer conversations, but they really get into the crux of what that individual is living through within their business. What is their concern? What do they wrestle with every day? What are they lacking? What are they really, really good at? What could they give a rip about? Because there's a lot of them that say, look, I have no interest in doing anything related to a budget. Can you help me? What? Heck yeah, absolutely, I can help you. So did that answer your question?
Answers the question. And, some of the people I know, we have some joint clients. Some of my, you have clients that, I may not work with on a monthly basis that, I've sent to you that, I did analysis for. I have other clients that have come to you for various ways. But I know a couple of the present clients you have actually made some decisions in the past to get to know their numbers. But one of the things we noticed is the amount of time and the years it took them to get to know their numbers is bringing them to a conclusion of they're investing so much time and energy into being their own CFO that they've become better business owners now and able to make more management decisions. And I know of at least 2 of your clients right now that actually went through training and coaching to do that, but now have come to you. And I think that's one of the most miraculous things here is, coming to terms with you've only got so many hours in a day. And the business owner has to know their numbers. We would agree with that. But
absolutely.
Right, but being able to derive that can take 10, 20, 30 hours a month, maybe 40 hours a month of that CEO's time. And during that time, he can't make the decisions he's got to run the business. So this is where the smart move is, if you're truly going to reach your dreams, is to make a team where the team members are the ones that work with you and you depend on, just like you called. I know one of the things that we talked about yesterday was a client where we would have a one-day strategy meeting. You, myself, their chief operating officer, and their chief executive officer. We would sit down and we would go over and discuss what all we're going to do in the year 2015 and what all it's going to get there. And this, to me, is going to save them weeks and weeks of mind searching, soul searching, trying to come up because their A team is right there with them for one day. And that way we don't have a lull. We leave the meeting, we've got 2015 planned. We're ready to rock and roll. We've got my ideas on the operations side, on the training side, your ideas on this. We can bring in our marketing partners that can also have management meetings. You know, you can't be an expert in all areas of business. Sometimes I consider myself, with my network partners like you, I consider myself a facilitator to bring the client the right A team to make them succeed. And I'm mighty
Absolutely.
you're one of the members of that A team that works with people. The key thing is you can only start so many people a month. Right now, we got people, we're coming up into November. People need budgets coinciding with their physical years. So all the things. And that brings to mind, if somebody calls you, if they call you initially and they have a go-to-meeting call and they pull a trigger and say, hey, okay, Patty, I want your services. What's the time frame to give them that budget to move forward with?
Sure, that's a great question. Usually when people decide that they're going to pull the trigger, we schedule the initial kickoff meeting, and typically within, depending on their timeline too, because it's not only my timeline, it's their availability, and usually the September, October time frame is really tough to get started with anybody in the chimney sweep service industry. Tough time, but typically it's between 2 and 3 months that we can have 2 and 3 months timeline, not 2 to 3 work months, but within, I'd say, about 30 working hours, we can have a budget fairly well ready to go.
Okay, and I've got one other question in just a second. I got to check my notes over here.
Mm-hmm.
And that would be, is there work in it for them when they hire you?
That's a great question too. Yes, I call this is an exercise in shared pain, and that's kind of my light way to deal with the way to lighten up the issue of, yes, there is work involved for everybody. So and when I say work involved, it's back to the one slide I had with who, me. Well, yes, you, because you as the business owner / CEO have the answers to a lot of these questions. You know the direction of your business. You know what your targets are. You know where your pain points are. You know what problems need to be solved. So those questions need to be answered before I can start quantifying some of the budget items. And what is your marketing spend? Where do you spend your marketing dollars? We're laying the foundation for the measurement of these types of things, not only for the measurement but for the ROI. We're measuring your return on the investment. So if you're spending marketing dollars, you're spending advertising dollars, we want to be able to measure that. We want to be able to work with the other folks on the A team to get you the best bang for your buck in every area. So that's what we're doing. We're working together. We're working with you, the business owner, and there's going to be some shared investment in time and a little bit of shared pain, but I try to make it as easy on you as possible and as enjoyable a trip as you'll have with any CFO.
Well, one of the things that I love about this business that I'm in and my personal job and my career at this point is I feel like I am growing, and each time I see a success story, it's not about the money to me, Patty, and I don't think it is about you at this point. It's more the pleasure we get to be able to see people reach their dreams and know that we've been able to get them there. Do you feel that same way when you look at a...
Yeah, that gets me so jazzed up. That is part of just me being me. I want to have fun along the way, and I try to lighten it up for people because sometimes financial things aren't that much fun, and people see it as drudgery. I try to make it a little more interesting for people. Part of that's my personality, but I really have it's a shared interest. It's a vested interest that I have in seeing these people through and achieving their success and seeing them achieve their success. I get all jazzed up about that. I think that is the most enjoyable part of my job, and I know you do as well. And I think that's why we get along so well together, is because we just have that shared value of seeing people achieve their dreams and helping them to get there.
Okay, well, one more question, Patty, and we're going to draw this to a conclusion. You
bet.
Okay, so anyway, here it is. We're dealing with independent, self-employed people that many times have started businesses in their homes, their garages, part-time, grew it to a certain point. And to do that, you got to have a certain drive. And sometimes, when you run into this, sometimes you run into people that may have, for some reason, and people think I'm this way till they get to know me, they think I'm a really hard guy to get to know. They think I'm really hard to deal with or whatever. When and I know I'm just a big old pussycat. That's where it is. My barks, my bite, and all that. So anyway, how do you deal with someone that has a personality like Jerry?
It's no problem for me. I spent over 25 years in the corporate world working for a lot of type A personalities. I can get along with pretty much anybody. I'm pretty much a chameleon when it comes to working with anybody. I have, like I said, I try to lighten up the situation with people. I don't take myself too seriously. I try to keep it light. I try to keep it fun for people to work with me. I try to keep our meetings focused. I try to keep them as short as I can, especially during busy seasons. I'm very respectful of people's time, and I keep the energy level up. I think, and I hope to have fun working with my clients, because I got to tell you, if it's not fun, then, neither of us is having fun, then you should fire me. And we'll have to find somebody else that's a good fit. I try to be a good fit for my clients. And if it's not, if it's torture for you, it's probably torture for me. So, we should part ways. But I hope that, I've had nobody say that to me at all thus far. So, knock on wood, we will continue to have 100% satisfaction and good success going forward.
Okay, well, Patty, I really appreciate the opportunity to do this with you. It's a real pleasure to me. You and I have only met face-to-face one time. We've had a lot of phone calls. We've worked with a lot of clients together, and we'll see each other again in another couple months, because I'll be right in your neck of the woods doing some classes and at the NCSG convention. So we'll see there, along with our friend Suzanne Dabrowski. But anyway, I just want you to know what a pleasure it is to have people like you on my network team, people I can depend on, because, folks, I tell you just like it is. If I recommend a person, if I recommend a company, I'm giving my personal testimonial. I don't recommend anyone that I don't feel confident in. In fact, that was the first thing when I got to know Patty was, hey, I got to feel good with you. In fact, I've got clients, and when I talked to her, I told her the other week, Patty, these people trust me. And since I trust you, they kind of trust you now. Now, make it work. And it's working. So, Patty, I want to appreciate it. You're seeing her email address on the screen. If you want to have a no-charge get-to-know meeting with Patty, it'll last about 30 minutes. What you need to do is email her. And it would really be nice if you'd send her your website or a little something about you and possibly how many people you have and a little nature, something she knows a little bit about your business going in. And Patty, I think from that point, you'll send them a couple times. You can set up a meeting, do it by telephone, and at that point, you can pretty well move on from there. Would that be an accurate answer?
That is 100% accurate.
Okay. Well, folks, again, I appreciate you taking the time. This is a recorded webinar, so you can sit back, record it again, listen to it again. If you've got other people in your office there that you need to bring in, if you've got spouses, business partners, or whatever, this will be online. This will remain online on the CVC Coaching YouTube channel. And Patty, I thank you so much for your time this afternoon to help independent business people reach their dreams. You're part of my team to get them there. So thank you from the bottom of my heart.
Thank you for the opportunity. It was a pleasure.